Hi there, and welcome to another edition of Your Questions in Focus. I am Melissa Beard, and joining me today to provide you with the answers to the questions you would have submitted to us is Ms. Joyette Garraway, and Joyette is one of our tax specialists. Joyette, welcome.
Thank you.
So we have three questions today, and they're basically dealing with different things. The first question is, if my annual earnings for the year 2015 is below the income tax threshold, would I be required to file my income tax returns for that period?
Yes, you would be required to file your income tax returns even though you would have earned below the annual threshold or the free pay. Whether you are employed or self-employed and you are earning income, you are required to submit your income tax returns.
Thanks, Joyette. And our second question is from one of our taxpayers who would have worked the 33 years and is now preparing to retire. And that person would like to know, I will be retiring and I'm a part of a pension scheme. What is required by GRA for me to receive my benefits? And I know a lot of persons have this question in mind.
For those persons who are retiring and you might have been a part of a pension scheme, the GRA will require a letter from the pension scheme stating what the employee's contribution was and what the employer's contribution was. And the letter should also state if there was any interest earned on those contributions. You're also required to complete an application form for a liability statement. All your income tax returns should be submitted, including the income earned up to the last date of employment, and the means of identification, which could be your ID card or your passport.
And we have, thanks Joyce, we have one final question, and I guess all those persons who are regular, who play the lottery regularly would probably be wondering this. Are the winnings from a lottery taxable?
No, the winnings from a lottery is not taxable. However, if the winner chooses to deposit his or her cash into the bank and it earns interest, they will be required to pay what is called withholding tax. On the other hand, if your net property amounts to more than 1.5 million Guyana dollars, you'll be required to file property tax as well, since cash at the bank is considered to be an asset.
Thank you, Joyette. I hope we were able to answer your questions. However, if you have any further questions on these topics or any other topics, please feel free to submit those questions to our Tax Advisory Services section, and our tax specialist will be more than willing to provide you with the answers. Thank you.